spring of 2025 has kicked off with tariffs creating inflation uncertainty, student loan uncertainty with future plans, and stock market volatility that may have you feeling like it's impossible for a medical professional to win with money in a season like this. Well, I'm Kristin Burton. I became a millionaire at 31 by investing in the stock bond market and real estate, and I've also lost multiple 5 figures in a single day in the stock market. So I can tell you a little bit from personal experience about what it takes to be successful investing through markets like this, and that's what we're going to walk through now. The very first principle to remember is that your personal economics will always be more important than macroeconomics. You can go through this season as a medical professional with no high interest debt, with 3 to 6 months of emergency reserves, with strong earning potential through multiple income sources, and you can come out on the other side having taken advantage of the buying opportunities that a season like this presents. Or you can enter and exit this season as someone with high interest debt, spending 80-90% plus of their take-home pay, no student loan strategy in place, no cohesive ability to take advantage of a potential stocks on sale season. How you move into this, what you do during it, directly determines how you move out of it. Now, especially when it comes to investing in the stock bond market, investing when stocks are, I'm going to keep saying it, on sale like they are now can really take an iron gut sometimes. You can feel like, okay, if you're a new investor, I'm putting in money and finally doing the things, and then I'm seeing my account balances drop. I feel like I'm setting money on fire, and it feels really pretty crummy. Alternatively, you might be a more seasoned investor. Maybe you have a multi-6-figure, even a 7-figure portfolio. Then you check your account and you're like, well, I lost 70,000 bucks today. That sucks, right? So either way, it doesn't matter. If you're a new investor or a seasoned investor, there is going to be a part of this that just doesn't feel good. But the real way to succeed is to dollar cost average your way through stock market volatility exactly like we're experiencing now. There's real data to support that. It's not an opinion. It's just a genuine fact. If you dollar cost average through this time period, you will come out the other side, whenever the other side is, ahead. If you decide to let fear control you, you don't do anything about your high interest debt, you don't make a plan for your student loan debt, you don't have the right cash reserves, you don't have the right systems, and you're investing based on random things you saw on the news, you're never going to come out ahead. You cannot allow yourself to be consumed with emotion in a time like this. You have to rely on data and tried and true systems. As medical professionals, we're supposed to practice evidence-based medicine, so we know the importance of this, but translating that into actually using a solidified investing system, there's a big gap there. So let me show you some of the data that comes from dollar cost averaging and what happens if you actually stick it out, you stay the course, and you invest through this market. Well, for one thing, when you look at any kind of stock market loss, you have to think about what concomitant gain is required on the back end to overcome the loss. And so that's a simple mathematical equation. Here's numbers to show you what that looks like, but really easy to conceptualize. A 50% loss requires a 100% return to subsequently get back to even, right? This makes sense conceptually if you just use really easy numbers. You say, I had 100,000 bucks and I lost half of it. Well, now I have 50,000 bucks. How much of a return on investment do I need to get on that 50,000 to get back to my 100,000? 100%, right? And so when we're talking about taking advantage of a stocks on sale season, it requires an understanding of what season of your financial life you're in and what your timeline for recovery is. If you're 29, you're 35, you're 40, your investing time horizon is decades. You have the time to recover, and so you can really truly view this as a stocks on sale season. If you don't, right? If you are 55 years old and you plan on living on assets at 60, this is why we don't have a 100% equities portfolio, right? Maybe you're at 60-40, maybe you're at 50-50 stocks, bonds, and it's because you don't have the time to wait for the recovery. It's really important to recognize that when you're thinking about your big picture asset allocation, which, by the way, you should be choosing before the stock market volatility comes. You don't make these decisions under emotional duress. You make them when everything's rosy, and you stick with them when things aren't. But if you don't have an investing system, you don't have a plan, you're just kind of wandering around in the wilderness figuring it out, that's when you really allow these emotions to drive your decision making. Now, you might think of the numbers I just said, like 50% loss, 100% recovery. Those are massive numbers. Is that even possible to get an 100% recovery? Well, here's a breakdown of some huge events that have occurred macroeconomically that translated to big stock market losses, the duration of the stock market decline, and the percent recovery. And you can see it is really historically common for you to actually have recoveries even larger than that. And in the long term, you come out exceeding any initial losses that you may have had. This economic downturn is highly unlikely to be different than the dozens that came before it. And so when you think about, should I stay invested? Should I be investing in a season like this? Well, what actually happens is if you miss that moment when the market starts to recover because you stopped investing, you really lose in the long term. This graph here shows some information of what it looks like if you just miss the best days in the market. Now, when are the best days in the market going to occur? Good luck. I don't know. You don't know, right? But a lot of times when we see stock market declines, we see at some point a recovery, right? Oftentimes that'll be V-shaped. So at some point, one day, when you're like, things can't get any worse, you're at the bottom. Now, you might tell yourself that every day. You don't really know when the bottom is. But at some point tomorrow, things will be better. And if you miss that recovery because you sat on the sidelines, because you were scared, because you didn't know, you didn't take the time to learn investing systems, then your long-term returns dramatically change. You can't afford to be on the sidelines when recovery starts, which means you can't afford not to invest when the stock market is declining. I think the biggest mental hack to getting past this is to look beyond what you see now, right? Like if you log in S&P 500 returns, you see horrible year-to-date numbers. I'm recording this on April 7th. The stock market, S&P 500 is down like 14% year-to-date, and you go, oh my gosh, woe is me, everything's horrible, I'm losing all this money. But when you look at the S&P 500 over this really long period of time, and this specific image actually highlights, with those little black bubbles, all of the big downer events that have occurred, right? Macroeconomic things that have triggered big stock market declines. And what you see is all those are blips. The long-term trajectory is a slow, steady climb up the mountain. And while it may feel like you're, on a yo-yo up and down, you're still slowly walking up. That's what you have to remember. When you see seasons like this in the stock market, where, oh my gosh, I put money in yesterday, I have less money today, what am I doing? I should go to cash or this, that, or the other. Most of the time, if you're seeing it on the news and you're allowing it to feed your investing decisions, you're making decisions based out of fear, right? We all know the saying, if it bleeds, it leads, right? Like this is how the news operates. This is how financial news operates. This is how people get clicks and views, is by scaring you. It's not really exciting for someone to look at you and go, hey, look, the stock market's down, but reasonably speaking, it's likely to recover over the next X number of months. You're likely to come out ahead if you continue to invest through it. And as a matter of fact, those dollar cost averagers who just invest a fixed amount of money on a fixed time interval and don't stray from that, they actually win the day. Because that's boring, right? Like that doesn't get anyone to click on it. But that's all that really you have to do to win in a time like this. You have to have an investing system in place. You have to make sure you're investing the right amount to achieve your goals. You have to have a desired asset allocation. in a portfolio design that's intentionally designed, not based on whatever whim you saw on the latest news article. And you have to invest at fixed intervals consistently through the storm. That's the key. But if you don't spend any time on the front end learning the real mechanics of investing, and all you're doing is playing this reactionary game as things come up in the news, there's no way you'll come out ahead. Get yourself in a position of security so that when this happens, when there's blood in the streets, as they say, you can take advantage and buy. Because I've been able to create financial security for myself by strategically managing debt, by having adequate cash reserves, by having that gap between income and expenses. We're driving home from our short-term rental last weekend, and I looked at my husband and said, here's what's going on with tariffs, with projected inflation, with projected interest rates, with projected stock market changes. And then I didn't say, oh my gosh, it's so scary. I said, how do we position ourselves to come out ahead in a season like this? You can't ask yourself those kinds of questions if you're coming from a position of weakness. And so if you do not have the financial systems in place, this is a perfect example of why you've already waited too long, right? Now is the time to get this stuff locked down so that on the other side of however long this instability is going to last that we're going to walk through, you're ready to actually come out a winner who has built wealth through the process, right? Like more successful businesses are started in recessions. Wealthy people get wealthier in seasons of buying opportunity where assets are underpriced compared to their value. If you want to be the person who doesn't struggle their way, but instead learns to ski in winter, as they say, this is your opportunity to get your investing systems in place, get your financial house in order, and make sure that you're ready for what's ahead.